Welcome to another YouTube video, another weekly breakdown. Um, Trump is Trump is trumping, man. No lie, no lie. Trump is forcing the markets to do something else with all his tariffs. Nonetheless, our job is not to react, but to respond to what the market is doing, right? So this is just what I'm looking at, right? We we're closing this imbalance. We came back up. For now, it's looking kind of bullish for now, right? It's subject to change. I'm also looking at that because if you look here, we have this gap, this weekly fair value gap over here. Remember, markets move to create liquidity, to close inefficiencies, to come back to equilibrium, as well as to take liquidity, right? So in this case, all of this kind of needs to be closed, right? So Friday, FOMC, we got that low. But now the crazy thing is the dollar went lower and so did everything else. Gold dropped, NAS, SPX, and the Dow. So that's why 9 times out of 10, I don't look at the dollar when I trade anymore. All right. The dollar does what it wants to, but I don't look at it. I'm just reacting off of what the markets are doing. Because sometimes dollar can be going low, which tells you to expect prices to go higher, only for them to do the opposite. So always trade what's happening right now. Respond to the market, right? React to what's happening now. You don't have to guess every single move. So let me just take all of this off. On Friday, I took shorts. On Friday, I took shorts in gold in London as well as New York. So it was a great way to end the week. And that's all I traded. I got a payout, my second payout. It's actually my third, but to hit my account is the second because I got the payout, but it went to the wallet because it was below $20. And then last week I added to it and got it paid out within 24 hours. So shout out to Funded Next. So now I'm going for my third payout, which is coming on I'm eligible for it this week, actually, the 14th. No, next week, Monday. So next week, Monday, should be getting another payout will reflect probably on Wednesday via the bank. All right. Nonetheless, what do we have here? I'm looking at a rejection block over here. It's a rejection block, so equal bodies that uh, it's kind of acting like resistance. And if we go down, where's my eyes? My eyes are looking at this as a place where we can come back down to why this, because it's this candle and this high are kind of close in proximity and they created a fair value gap. So this would be a nice terminus. I'm still short on gold based on the higher time frame. So if you trade ICT concept, this is a market maker sell model. We have accumulation, we break out of the range, come and retest, low risk buy. And this is a smart money reversal. Now, why is it a smart money reversal? This low was taken out by this candle, right? So that and it was taken out with aggression, right? So it's not a low to come and retest because if it was, this candle was supposed to close above this low. But the fact that we're pushing lower, that's a market structure shift. So we're going downstairs. So since we're going downstairs, the first thing I'm anticipating then is for us to go up first. Right? So anywhere around this level, then I want this as a rejection block. So I'm expecting us to come up to this level. All right. Close some gaps, inefficiencies, way. Okay, so the first thing I see is we have a break over here, right? But this breakup will be kind of invalid because if you look at this candle over here, right? This is where I short actually on Friday. Let me see. Yeah, after this candle formed, I short. So I short from there to there. I bought there, intra week, short here, short here. All right, on a 5 minute time frame. So it's kind of out of play. So I don't really see like a fair value gap apart from this, right? So if I have to go down to a lower time frame, we have a mitigation block over here. So anywhere around these areas. So if I have to put my fib as well from this high to the low, anywhere above 50% of this range is where I'm looking to short. So market is closed right now, but in the mornings, what I usually do before I go to work, I just set alerts with like a 0.01. As soon as it goes on. Okay, I'm coming up with getting shouted at by a kid, yeah. But anyway, so I'll put like an alert 0.01, right? Wait for the market to tap it. Once it shows me a signal, then I go in alignment with it. Cool. All right. So starting on the monthly time frame, we always want to look at the long-term picture. So this market has just been rallying, right? So I don't really trade currencies anymore. They do have money, but for me, man, I'm not really trading currencies at the moment, unless there's a clean setup. But honestly speaking, I'm just a gold and US 30 trader. Gold, German 30, and US 30 trader. But we can always break it down. So we do have a fair value gap here, which is holding the price. We also have a bullish block over there. And it looks like we're coming back down into it. So Monday, I'm expecting the price to come down. Here's my range from this high to this low. So at least this pair is a mirror image of the dollar. So looking just to come back down here, test these levels, put a pending order with the small lots around this area, see how price reacts, right? Monday, Tuesday, Wednesday. See what I'm talking about? They're not in sync. I don't like that. And the thing is, the Germans, okay, not really the Germans, but uh, the US indices, they move in sync. They move in sync. So that's where you get smart money techniques because it's obvious, it's easily readable. But nonetheless, traders are trader, man. So this is on a higher time frame. Yeah, we came back to this imbalance. So I'm still looking for a push higher around this fair value gap. Actually, we came back to the fair value gap. See, yeah, we came back to the fair value gap. So we just need to see how price reacts around here. If we break through this level, right, this fair value gap, and then we close underneath it, then it's a market structure shift. But for now, it's looking hella bullish, man. It's a market maker buy model. So we went down to come and take out this house. So I really, really believe if you look here, like we have equal highs, which is that monthly buy side liquidity. That over there is a catalyst to be taken out. Right. All right. And then jumping to the funded account, let's look at German 40. Next one. Let's look at German 40. Didn't trade it as much. Wish I did. I mean, look at this. But such moves happen. It happen once or twice every month. So you can't really be angry at yourself for missing them. But they happen all the time. So nonetheless, we bearish, obviously. Um, monthly fair value gap. And if we bearish, where are we going? The next level of support is this for me, right, which is a monthly order block. Right, they bought here to send price higher. Right, so what goes up must come down. Nothing really clear here. So, but one thing I do know is coming into the new week, what could happen on Monday? It could keep dropping. And then New York, it will go higher to try close this, or can just keep dropping. Just keep dropping. So we don't have to guess. We just need to anticipate between the two, right? So If it does come back, what I'm looking at is this level over here, this inverted fair value gap on the 4-hour time frame. Yeah, that's pretty it. So honestly, I'm expecting market come back down. It can even drop and hit these levels in the morning. In the morning, just gap down. Oh, come here. And then we can see a rise up, right? Make people think that was the low and then come smash it. And then come smash it. I mean, look at this drop, right? If you caught this, I shout out. Shout out to you. I'm not jealous though, because market moves like this happen all the time. I ate from gold, and that's all that matters. What am I looking at? I don't know why I drew this, but I'm looking at this level right here. It's a level of support. So market make a buy model on a monthly time frame. Consolidated, broke outside of the range. So it's definitely coming down there. It's definitely coming down. So I'm call this a market maker buy model consolidation. All right. And then here, where are we? So this is an order block, right? But this is the first one because this is just a propulsion block. Propulsion because it formed in between these, right? So this level might be a little bit too high, but we'll never know. We just always put levels that we anticipate price to go into. And if you look at the propulsion block, we also have this small weekly bearish order block. And then we just have a bleeding market. What is happening? We just have a bleeding market, bro. Go on the lower time frame. Lower time frame, these are levels where I'm expecting at least a retracement bounce. If that fails, maybe the CB over here. This is a small fair value gap. Insignificant though, but still a fair value gap between these two levels. So how I trade, because I'm at work, don't have time to be staring at markets all the time. So I'll just draw these out and transpose them to my phone, right? And based on time, I look at markets based on certain time. I look at it around 9:30 to 10:15 in the morning. If we're still not there, right, or we're accumulating high, if I bought, I'm expecting TP to be hit around before 1, right? Because that's when the London session ends. Yes, London session, and then we're jumping into New York. All right. So this is where I'm expecting price to come back down. So scenario is we could keep going down, open gap in the morning, and then start rallying. Once we rally, I'm just looking for a fair value gap, break or structure, retest all that fair value gap, and then I'll go long to these levels over here. And this one is, for me, is a high probability fair value gap because it has highs on top of it, equal highs, right? So that the market is going to definitely want to come there and then hopefully go down. Sometimes they can just retrace only to come back higher or even come and close this gap, but we don't know. We'll see what happens. And oh yeah, I actually marked these levels out already, right? So I'm also looking at this as a close terminus, but we're very close to it. So this low, buy this low, because I'm sure if you go to a daily to a lower time frame, there's equal lows down there. And we also have the swing low that needs to be swept. And what is this? This is previous month's low as a place of support or resistance that we can come up to. We also do have a break over here. Are you still recording? Okay. All right, recording is still in session. So I don't know what's the last thing you guys heard. But yeah, I already marked out these levels. So I'm looking for a retracement up here. Anything on the lower time frame, there's nothing really. Maybe this level out as well, which is like a order block. right, on the hourly time frame. So these are the levels that I'll mark out on my phone and then just wait for price to get there. Mondays, I prefer trading. Um, New York, just let the accumulation get out away. So this is what I'm looking at on the NAS as well. Beautiful thing is the market is moves in sync, right? So happy trading. Hope you guys catch nice moves in the new week. All the best. All the best until the next video.